Okay, let's get ourselves to the last part of our show in that case. Then we always finish our kind of guest interview things with some quick fire stocks. We normally have a name for them, and I'll ask you about, I think I've got 11 on my list here, and ask you, Jamie, for your kind of positive or negative judgment on them. We won't get into details, but you might want to kind of offer a sentence as to why you think the way you think about them. If you've never heard of them before, because I haven't issued this list to you, that doesn't matter. Feel free to just say pass. I've attempted to kind of skew these towards what I perceive to be things that you will either have heard of or be interested in, or are similar to things that you own or might own, but I just don't realize that you own them. So let's see how we go. We always come up with a name for this. I struggled very badly to come up with a name for this particular segment, but since you are the Stocks and Savings podcast, how's about, if you like the stocks, say stocks, and if you'd rather leave your cash in savings, say savings.
I like that. I like that. Before this, you told me that you couldn't come up with any good names. I like that.
It's not with the doctor is in or the doctor is out, to be honest. It's down there in terms of my general output. But anyway, should we get to it?
Let's do it.
You said, by the way, that you were, you've said a few times that you're a kind of growth-oriented guy. So it is the law that I have to ask you about Tesla. Let's get that out of the way to begin with.
Oh, gosh.
You're not going to pretend you haven't heard of it, are you?
What's that? Is that with a P? The guy, definitely not a softball to start with. You know what? I am going... This is such a hard one. And I am just going to say stocks. Because...
Okay.
And, you know, in terms of everything I look for in a company that I've kind of outlined before, Tesla has that. You know, it has a, well, I'm not going to say a very strong brand. I would have said that back when I did own it. I actually sold my Tesla shares in early January this year, which was a very fortunate time to sell them.
I'll say, well done, I think.
Yeah, that Andrea sold hers, I think, a few months earlier when shares were about half the price. So that was that. I try not to remind her too much of that one. But you know, Tesla
definitely won't edit that bit out or anything. Then
Tesla has a lot of the things I look for. You know, clear leader in an emergency industry, in an emerging industry. Yes. Optionality is another thing I look for. You know, different ways to win. I mean, Tesla does have that. You know, I don't necessarily think the robots yet or anything. I kind of don't consider them. But for my investing approach, it's still knowing that it's a company that at least has the ideas to try and do stupid things, or at least to try and keep pushing the boundaries, because you never know when you're going to hit an AWS. You know, if you don't try those things, you don't know what's going to happen. Robo-taxis, I know it's everything the Tesla investors have gone on about for the last, 5 years. And they've only just got rolled out now. Some might say due to political favoring and whatnot, but I'm sure it's due to technology. You know, they've been rolled out. They are going well, I guess. I can understand the argument for that. If I had to guess, I would say that Tesla shares in 5 years' time will deliver a decent return. The reason that I sold my shares in early January was because, you know, Tesla as a business right now is struggling, undeniably struggling. I do think its brand has been hurt. I do think that it is, well, yeah, I guess still suffering from a bit of a cyclical downturn, but I think that's lasting a little bit longer than I expected. And back at the start of January, its valuation for what you were getting was just too disconnected for me. So yeah, just stocks.
Diageo.
Savings. I mean, isn't it just it sounds like it's more of a pension fund than anything else. I don't know that much about Diageo, so I might be being harsh. They don't know that. That's AG Par. Yeah, I will be honest. Diageo is not a company that I follow that closely, so that probably should have been my answer. But I just heard of a probably slow growing British company and immediately was just like, no, just protect my money, please.
Sounds good. Okay, here's a not slow growing, not British company, Nvidia.
Um, Stocks, but I wouldn't invest in it
Okay.
because I, again, the incredible company, all the traits I look for. I don't think that we are in some sort of AI bubble. It depends how you define bubble. Obviously, there's insane demand for Nvidia right now. It has a clear lead. It doesn't really have any competitors, and it can charge whatever the hell it wants. I don't know if that is going to change in the future because that came around very quickly and that might stop very quickly. And I do not know enough about the industry to judge either of those things. But as I've been saying for the last 2 or 3 years, if someone told me they were going to invest in Nvidia, I'd say, good luck, it's probably going to do well.
Almost exactly my view as well, by the way. Uber.
Stocks. I This is a company that I have considered and am still considering investing in. It's done a pretty incredible job of flipping the narrative from how is this company ever going to be profitable to this company is starting to print cash for fun. Um, it's rolled out I think it's Uber One subscription, which is basically like Amazon Prime for taxis. And it's done a good job of bundling in the Uber Eats side with it as well. The business just seems to be flying. I mean, they don't. Well, they might do planes in some areas, but it just seems to be doing really well. And then there's this idea that like autonomous driving would kill Uber, but actually, what it's looking like, unless Tesla or Waymo basically dominate the market, at the minute at least, it's looking like there'll be a whole load of different upstarts that have their self-driving taxis that are looking to find customers. And the best place to find customers for people wanting a taxi is Uber. So yeah, I think it's a company with a lot going for it at a reasonable valuation. I think I can't remember, I think it's 18, 19 times free cash flow, and it's expected to grow fast. So that's one I can see myself adding to my portfolio.
Okay. Palantir.
Mm. Don't talk to me about Palantir because I sold my Palantir, my very small, admittedly, Palantir shares um, at about $8 or $9 a share.
It will be very
Uh,
small if you sell it back there, yeah.
I think it was about a £300 investment. So it was very small. I think if I'd held it, it might be the biggest position in my portfolio. The reason that I sold it was because I heard their CEO talking quite enthusiastically about kind of like the impact of war on the business. I completely understand having the view of being almost like completely emotionally disconnected from the companies you invest in. No problem with that at all. But one of the, I guess, other ideas again from David Gardner was in I think your portfolio should reflect the future you want to see, something like that. Obviously, that's very much open to interpretation, but it's something I kind of stick with. And, I don't pretend to be like a saint with the companies I invest in, but hearing that interview, it was just a little bit icky. Um, if you had told me that shares would then go on to go up 30 times in value, would my morals be as be as solid? Uh, I guess I will never have to answer that question. Um, but the valuation is insane, so I'd rather put my money in savings.
Rolls Royce.
Hmm. I don't know enough about it. I know that it has been a pretty fantastic turnaround for them. And normally, when I see a stock like that flying, I kind of assume there's something weird behind it, but it looks like actually what you got behind it is a business doing pretty well here. I don't know well enough to put a judgment on it, but from the snippets I've heard, it sounded pretty impressive.
Fair enough. Reddit.
Ooh, again, one that I've never looked at. It feels like one of those stocks that has a habit of darting around in all different places. I do know that it's growing quite fast. I do wonder That's a company that I can't quite figure out how that looks in 5 or 10 years' time. So I will err to the side of savings.
Interesting. I put that in as something that was Pinterest adjacent, and I've heard you speak about that kind of recently. I wonder whether that's wonder whether it's worth a look for you. Try Nike.
Hmm. This feels like one of those where if I invest in it and the shares go down, I'd be like, well, you invest in a business that's struggling because it looks like a decent valuation. So well done, you've made the same mistake that you keep making. It's also one that if I don't invest in it and shares go up, you look at, well, why didn't you invest in such an iconic brand when shares had fallen so much? Um,
Which way would you rather be
so
wrong?
yeah, exactly. There is no right answer here. So I will. I'll say stocks. Just
Interesting. Okay. Eli Lilly.
see that it's dropped 15-16% today, I believe.
Yep.
I think I read somewhere where there was its biggest drop in 25 years, maybe. So I generally avoid pharmaceuticals. They go in my too difficult, too complicated category. I haven't looked through the results, but I'm pretty sure I saw somewhere that the results themselves were fine, but it was one of its weight loss drug trials that were maybe a little bit less effective than hoped, and maybe had slightly worse side effects than expected. Don't quote me on this because I think I just saw it on Twitter. I'm not convinced that's what happened. But those are the kind of headlines that you see with these companies, and you know, again, that is not something I can, at least in my head, I can't plot out. I understand if a company has the right foundations to make the right discoveries and to grow the business that way, but there's such big one-offs, I feel like, in the industry that I avoid it. So savings for me.
Me too. Last one on my list is Alphabet.
So this is one I do own. So you almost got the entire way without mentioning a stock in my portfolio. But yes, Alphabet, and particularly at the minute, is stocks for me. I think it had a really strong report. I think that Microsoft's and Meta's reports kind of took the shine away from it a little bit. And then it really hurt my Amazon investment after. But I think Google's latest results were really strong. I think that there's a lot of talk about Google search and being disrupted by ChatGPT. I feel like a lot of people seem to fall either strongly on one side of it's going to kill Google, or don't be stupid, Google's Google, it's going to survive. Um, I was very much, as an avid ChatGPT user, on the fence because I really, really believe that Google has all the tools to create at least a competing, if not a much better product. Um, and I feel like it's slowly starting to do that. And I feel as well, this was another quarter where Google search, I think, grew revenues 11.5%, accelerated from 9.5% the quarter before. Like, if something's getting disrupted and it's the size of Google search and is growing revenues by 11.5%, then, I mean, imagine if it wasn't getting disrupted. I think that there is a lot of good stuff going on with Alphabet's business, at a valuation that is, in my eyes, stupidly cheap. Um, Again, as I've kind of made clear, those tend to be traps for me, but I really don't think Alphabet is one of them.
Fair enough. That brings us to the end of our list for stocks or savings. I said I'd let you kind of close out this one, though, with a 30-second sales pitch for a company that you thought we might be interested in. You mentioned that actually you kind of got the Steves the other way round and thought I might have been the kind of northern, more experienced, more growthy one of us two, and that it would be possibly more interesting to him. I'm not particularly strong. He's from Hull, of course, and I'm from sort of near you in Oxford. I live sort of near you in Oxford. I'm not particularly strong on mining companies, pies, or roof trusses, but I'll give it my best shot. What are we talking about?
Yeah, so this is, I would say, slightly more stock for the other Steve, but you never know. And obviously I can't really pitch a company in 30 seconds, but it is a stock that you guys have covered before. I think one that you've always been quite positive about, and that is MercadoLibre. So the very lazily per Amazon and PayPal of South America. And my one question was going to be, and I don't know if you would be able to assume this for the other Steve as well. Why don't you invest in it?
I can't tell you for him. I can tell you for me, and the answer will be different for him. So I can tell you this is definitely not his answer. The answer is because I used to own it, and then I sold it, and now it's higher than it was when I bought it before. So I'm starting when it get back to whatever it was, about 1,200 or something like that. I'll get back to buying it again, and yeah, that's basically my reason.
That's good. That honestly, I was hoping for an answer along the same lines, an answer that focused on the share price, because I hope you think that it's a pretty good business. The numbers it puts up are continually stellar. Um, so I've already gone through my thoughts on valuation because I thought valuation would be the issue. I've already gone through my thoughts on valuation before, so you know roughly how my thinking works. Now, I just want to go through very quickly Mercado Libre's valuation by my model. So we're looking from 2024 to 2029. And again, this is a mixture of my own assumptions and what analysts are expecting. So if we have revenue growing at an average of 22% a year, which to be honest, I feel is conservative considering they're putting up 30% plus revenue growth at the minute, but we'll say 22% a year revenue growth. EBIT margins expanding from 13% to 18%, and an EV to EBIT multiple of 28, which to be honest, again, I think is quite conservative as a 2029 EBIT multiple because I think there will be way more room for growth and way more room for multiple expansion. But anyway, stick in all of those things, and what you get is a share price in 2029 of $6,469, which I don't know what Mercado Libre share price is right now. I think it's about 350. That would be a 22% compound annual growth rate if that is achieved, and I feel like that is conservative. So the reason that I thought this would be a potentially 30 seconds to convince you is because I don't think I need to convince either of you that it's a really good company. I think that what I would need to convince you of is that the current share price is worth paying. And Mercado Libre is, and has been for a while, the company in my portfolio where I've been super, super confident about the business and super comfortable paying its share price. And that's one that continues. So you don't have to tell me if I've convinced you in 30 seconds, but that's my 30-second pitch for Mercado Libre, which is my third largest holding.
I've heard the longer version of your pitch quite recently on Mercado Libre. I think I heard it on one of your more recent things we've been buying lately episodes. So I know what you think
Probably, yeah.
about that in slightly longer terms. I think you're absolutely right, and you also pointed out that there's something else to it since we've last covered it, which they previously had the Envios marketplace finance thing, payment processor. There's something else in there now, which is a kind of weird part of their business.
Entertainment?
Yeah, that which I therefore hadn't modelled in at all into when I was thinking about this. I thought of this as if we start from the kind of loose starting point for the moment of South American Amazon, because everyone does, and you and I both know the kind of limitations to that comparison, but start there for the moment. One way I sort of thought about it when I was a buyer of this thing is it's kind of like Amazon, but without all the stock-based comp. Because I'm an Amazon owner, and that's the thing I like least about it, right? Stock-based comp has historically been quite high. They are currently chopping it down, but they were prepared to let that run for quite a bit, and no one loves it. You can make a case for thinking it's worth it in a lot of cases, and in Amazon's it probably was, but no one thinks, I got to find me some stock-based comp somewhere. And dilution going on. Mercado Libre seems to be that without it, which is interesting. When we were looking at it, or when I was most recently looking at it, the big variable was actually kind of Argentina itself and what was going on there economically and macroeconomically. So I was looking at the lending thing, and Steve and I would take turns reading out results and looking at net interest margins that were enormous. And the reason was because interest rates in Argentina were through the roof as they were attempting to bring down the kind of inflation month over month that the UK was panicking about year over year. And since then, I've taken my eye off the situation entirely in Argentina. So I guess the variable that I still need to fill in my head is this thing is in Latin America, and I feel like I ought to at least pay some attention to that thought because it's been a distinctive environment in the last couple of years or so, and to not have a view about that would be the thing that currently stops me, I think. Anything on that thought?
So when I kind of spoke earlier about how I'm kind of comfortable with, I guess, uncertainty and not necessarily knowing certain things. So I don't know what's going to happen in the future of the South American economy. Obviously it's going to be, I was going to say it's going to be more volatile than the US. I would assume it would be more volatile than something like the US. Who knows at the minute? But one thing that I do know, and that has been true, is that, fine, over the last decade, there's been challenges in the economies of Argentina, the economies of Brazil, the economy of Brazil. And MercadoLibre has really rolled with the punches. So this, so whilst I don't know what's coming in South America, what I do know is MercadoLibre is a company that's very, very capable of operating in, I guess, these more unique market conditions. And actually, right now, Argentina is starting to normalize because they have got inflation under control, I believe. And that's actually really boosting Mercado Libre's business. On the other hand, I can't remember exactly what, but I think that I still haven't dived into their latest results yet. But I know that they are having a little bit of a headache in Brazil now. These are kind of, I think, punches that I am more than happy to roll with, and punches that Mercado Libre's team have shown that actually they can roll with, because they have, if you just look back at their performance, I mean, it has been stellar. So I guess that also speaks quite a bit to my style of investing as well, and the type of stuff that I'm okay to kind of hold my hands up and say, okay, I don't know what's going to happen here, but I have reason to believe that this is a management team that has, gone through these tough times before. I have no reason to think that they are not capable of doing it again.
One way of thinking about this, I guess, is in terms of what you said in earlier on here, what you look for here. And Mercado Libre is clearly a massively strong market position, very difficult to disrupt in its markets for the time being. And you could think of it, I guess, this way. This may be a paraphrase of what you just said, in which case, let me know. But suppose things go really badly in Argentina over the next 5 years for the moment. What would you like to own? Well, probably the strongest business you can find in Argentina for the moment. Suppose things now go really well in Argentina for the next 5 years. What would you like to own? Well, probably still the strongest business you can find in Argentina, assuming it doesn't currently trade at an insane valuation or something, which you covered just now, and so on and so forth. So look, there's a good sense in which all the stuff I said, I'm not going to forecast the macro environment for Argentina, and I'm not really going to trust anyone else who does either, to be honest with you. But there's a good sense of which, well, what do you want to buy in these situations? Buy the best thing you can find. It's going to be the best thing if things go badly elsewhere, and it's going to be the best thing if things go well elsewhere. I feel like that's not quite just parroting back at you what you said, but similar in spirit.
Yeah, that is it's not what I said, but it's definitely it aligns very much to my way of investing. So yeah, you make a very, very good point. That is true. In whatever conditions, you tend to want to own the best thing.
It's not my point, unfortunately, but it's worth making in these cases. All my best material's stolen from someone or other else. It wasn't Steve's either, although he might try and take credit for it. Anyway, we should probably leave things there. Mercado Libre goes on my massive list of stocks to buy at the moment because right now it feels like everything I look at seems to go down, but I am available to buy things, and we'll see where that kind of takes me. Jamie, thank you so much for your time. It's been a pleasure talking with you again. We'll try not to leave it 2 years until I go on another holiday. I mean, until we get you back on the show to have a chat about how things are going. Everybody else, check out Jamie's podcast down below. Most of you, I assume, already are, but if you're not, do it, because it's really interesting. Their summaries of the stuff that they're buying and why they're buying it are fantastic. Both Jamie and Andrea are really interesting to listen to. And as I said earlier, you get a real sense of authenticity from them that comes from the kind of setup that they have and the way they think about their platforms. We'll put links to all their socials down below. Go sign up to Trading 212 through their link, because they're also kind of sponsored by the same brokerage that we are. But for now, I've been Steve W. I've been talking with Jamie from Stocks and Savings, and I will see you next week. You've been watching a segment from the Playing FTSE show, brought to you in association with our favourite broker, Trading 212. For the full version of the show, check us out on Spotify, Apple, or wherever you get your podcasts. And if you open a new account with Trading 212 using the link in the description, there's a free fractional share in it for you. Just make sure that you use the code FTSE when you sign up. Terms and conditions apply, and do remember that when investing, your capital is at risk.